Why in the hell are banks failing again? And yet they've got the biggest buildings in business and bailouts. And why is it that inflation spikes so much? Hell, why is it that the rich get richer and the wealth gap continues to become even worse? And most importantly, what can you do to protect yourself and profit? This might not start out as my most inspiring video, but I'm here to tell you, probably gonna be one of the most important yet. I'm gonna conclude with plenty of practical ideas, strategies, tools, and resources, and even a bit of a surprise at the end. To start, it's time to get clear about the financial bullshit that's robbing people of their wealth, their peace of mind, and it's ruining savings and even lives. First, we've got to identify and understand the problem. Make no mistake, this problem is the trifecta of BS. First, like in the past, I've been pretty outspoken about how corrupt Wall Street is, especially the Wall Street banks, but I feel that I might have been a little bit too nice and even soft in the past. Second, we've got a different type of bank, the centralized banking system, also known as the Federal Reserve, which is a major culprit of chaos, confusion, and definitely inflation, and now raising interest rates, right? Finally, and of course, last but not least, I don't want to leave out the government. They're only like $30 trillion in debt. That's an awful lot of zeros. Look, man, it takes 32,000 years to count to a trillion. I know because I Googled it. Do you know what was going on 32,000 years ago? An ice age? Maybe. I don't know. Think Neanderthals were roaming the earth? Possibly. Joe Biden had just been born. Trump was running around with all the other orangutans. This is the kind of stuff that was going on 32,000 years ago. That's how long it takes to count to 1 trillion, let alone over 30 trillion. See, those three people, Wall Street, banks, and the government, they're the three stooges that devalue our money, our way of life, and they're responsible for rigging the game against the working class. So let's begin with the Federal Reserve, the central banks. Banks have absolutely failed in the past. We remember in 2008, there was a huge bailout, trillions of dollars given, and yet here we are again. Yeah, these highly regulated organizations, regulation to make us feel safe. They actually tried to talk us out of regulating them after they blew it, and then they had all these executives spend a bunch of money. Are these institutions the safe haven that we've been indoctrinated to think that are the best place to store our money? I agree they might be the best place for transactions when we're talking about our local banks, but the last time we had a massive bank failure, it was the Great Recession of 2008, and how many stories did we hear about the taxpayer having to bail them out, how they were too big to fail? So there was so much wrongdoing, and there was no jail time for that wrongdoing other than one person that I think worked for Deutsche Bank. One person. Yet there was an economy that collapsed worldwide. So what's happening now? How's it different? And why is it kind of happening again? Why do banks end up going broke or insolvent or at least in need of government assistance to stay afloat? Well, these same banks were ridiculously profitable just recently when interest rates had remained low for a very long period of time. See, they could borrow or rent money in savings accounts or money markets or certificates of deposit for a measly amount of like 1% or even less. And then they could sell that same dollar in a mortgage or a car loan for 3 or maybe 4%, or even 12% or more with credit cards. Think about that markup. If you could buy something for $1 and sell it for $12, that's a massive, it's impressive markup. Going from 1 to 12 is like being able to rent something for $100 and turn around and charge $1,200 for the same thing. 1,200% return, 1,200% return on that spread. So why do they make so much? And why are we in a bit of trouble now? Well, when you increase interest rates, it actually starts to lower their margins, and their old portfolios start to become problematic because when interest rates go up, fixed income assets go down. I'll explain more. They made all those massive returns just for being an intermediary, a middleman for savers and borrowers. And we used to get a toaster, but now you just get a sucker, dum-dum. But it gets worse. See, this story gets a bit worse because thanks to the Federal Reserve, which was established in 1913, it's neither federal nor reserve. But that's a brilliant name. Oh, reserves? That sounds great. Federal? It's government. Nope. The Federal Reserve is private centralized banks. We think the richest people on earth or on this planet are Elon and Jeff Bezos? No. It's the central banks and the people that own those banks. So move over, those guys, Elon and Jeff Bezos. Look, a huge part of inflation has come from something that began kind of initially as a basic idea in the 1800s to deal with bank runs, but then was revolutionized and popularized by the Federal Reserve, and it's called fractionalized banking. This is one of the major culprits. This modern-day banking system was invented off of Jekyll Island. Sounds crazy, right? Like Jekyll and Hyde, just off the Georgia coast, a place that was for the elite, the ultra-wealthy for a long time. And this meeting in 1913 was kept secretive for decades with 6 individuals, 6 white men, and is part of why inflation exists today. Fractionalized banking, what it does is allows a dollar to be used more than once simultaneously. When you make a deposit in the bank with your money, they can lend that money out minus a small reserve requirement which fluctuates. When that bank lends that money to the next person, that person gets to deposit that money in any bank. So it's your money in their hands. They make a deposit, and then someone else can take that money again. The bank lends it over and over again minus the small reserve requirement. Essentially, the same dollar is getting lent out, and let's wait for it. Maybe we need to cue the LeBron James Miami Heat announcement, not the one where he was talking about going there, but now he's with his teammates, and he was like, not 1, not 2, not 3, not 4. Remember all the championships? Yeah, they can lend the dollar just like he talked about multiple times. The same dollar over and over. This is welcoming a much higher inflation into our economy. Since 1913, inflation has become a normal part of our lives because of the invention of how banks work. And during COVID, banks were actually given massive amounts of money through another Federal Reserve invented strategy. It's really created hyperinflation. It's called quantitative easing. I don't know why there's not more talk about quantitative easing because, look, it's a made-up BS name that could have just as easily been called fucking your money. That would be just as effective. Quantitative easing added at least 40% more to the money supply. I think it's been more than that, but at least 40%. That's watering down the soup quite a bit. Banks were given this massive liquidity infusions through quantitative easing. That way they could lend out at lower interest rates, keeping the economy going. And instead of lending all that money out, they used it to provide more safety and liquidity for them. And it was safer for them initially, but quickly, the government spending combined with quantitative easing started to create inflation. And when that inflation was created, because banks were sitting on a lot of cash and they were buying these really low interest rate kind of fixed income things on their reserves, because all the quantitative easing funds, they bought stuff like U.S. Treasuries, and U.S. Treasuries are seen as some of the safest fixed income investments due to the unlimited taxing power of the U.S. government. Okay, so we got these fixed income instruments. It's like, great, they're not getting a huge interest rate, but it's just money that they got with the lowest reserve requirement ever, the lowest interest rate from the Fed ever. And instead of passing that on to the people that were the depositors, as far or the borrowers, they just kind of lower the interest rates a little bit. They then stored it in these U.S. Treasuries, but now, as we've seen, they're trying to battle inflation. The Fed's raising interest rates, which has created risk for the banks. So let me just give this example again. If you're investing money, would you rather get 2% or 6%? Pretty easy, right? 6%. That is if all the risk is equal. So if the bank has a really low interest rate bond in a time of rising interest rates, they have to sell those bonds at a discount, that U.S. Treasury at a discount, to match the interest rates new bonds are paying. We're at a different time. We're in a time of the internet when news hits any bank having any level of trouble, and they now have to liquidate those U.S. Treasuries to get money to depositors. They have to liquidate them at a loss because interest rates have gone up. So with higher interest rates, they now take that loss, and now they don't have enough money for all the funds if everybody liquidates, as in the case of Silicon Valley Bank. The money's not there because of higher interest rates, which, by the way, was what the Fed did after the quantitative easing and the government spending in order to battle this inflation. And part of inflation is just cronyism, which is basically corporations that the government's complicit with, that they've been able to increase their profits substantially on the backs of workers. I'm not talking about small business. I'm talking about the publicly traded companies that don't have your best interests in mind. So These banks got in trouble because they don't have all the money in the bank. They're sitting in treasuries, or they're already lent out in mortgages. And when there's a run on the bank, they become insolvent. Again, this is what's insane. All this was created as a response to battle inflation, which was a Fed policy that came from quantitative easing that created a lot of the inflation. The Fed increased the interest rates to try to slow that down and put the bank's investment capital at risk, which they had given them a bunch of the capital during a run on the bank. The inflation happened in a large part because of that quantitative easing combined with government spending when the government was spending money they didn't have, which they've been doing. I don't care whether you're Democrat or Republican, they both spend out of control because they're creating debt, 30 trillion plus. So when we take quantitative easing, it seems like I'm really pissed about it. I'm a little frustrated, but a little bit of passion here. And then we add fractionalized banking. Then we see that inflation happen and the Fed raises the rates to battle the inflation. We have the shitstorm that we're in right now. You know what it feels like? It feels a lot like that scene from Fight Club, if you've seen it, where Edward Norton is punching himself and until he gets bloody in front of his boss, acting like his boss beat him up so he could just get time off and be paid instead of being fired. Yeah, it's a bloody mess, self-imposed by the Federal Reserve, by the government, and just by Wall Street banks and Wall Street in general. So inflation destroys our trust, and it should. We work and we store the value of our work with money. Then inflation devalues our purchasing power and our humanity in the process. It's a man-made artificial creation that becomes the loss of our value. That's called inflation, born of quantitative easing, fractionalized banking, and government borrowing with zero value exchange. Just poof, invented money, devaluing our existing dollar by making it available at seemingly no cost to the institutions we trust the least. I mean, do you trust Wall Street? You're like, yeah, they're good. You know what I trust the government to do is dumb things with my money. You know what I trust the Federal Reserve to do is to do things in their best interest. And what do I expect Wall Street to do? Extract value, extraction of money from Main Street into Wall Street for the big buildings and the private jets and all that kind of stuff. And look, I'm a capitalist, but we have to understand the difference between capitalism, corporatism, and cronyism. When we have the government, which is the little bitch for Wall Street when they mess these things up, just bailing them out, that's a problem because it's the taxpayer that pays for the mistake. I mean, let's think about Wall Street, the inspiration of the inspiring movies. Wall Street, that's a movie about legalized white-collar crime. Wolf of Wall Street, white-collar crime, but with more drugs. Boiler Room, The Big Short, Margin Call, and the list goes on. Tell me where there's the hero movie about Wall Street. So when we had this low interest rate environment, along with a flood of printed money going to the banks with quantitative easing, it created an additional risk to be paid by you, the taxpayer. The government spends more to protect the banks that are losing money. Why? Because they don't want you to lose faith in the banks. The banks are losing money in part to the rising interest rates and the risk it poses to their existing assets, and you clean it up with the taxes you pay. This is the wrong kind of charity. You know what it's like? It's like rewarding your child for bad behavior. Oh, you punched someone? Great. You know what we're going to do? We're going to get some ice cream. It's awesome. We show people there's no consequence because these institutions already massively messed up in 2008, and all they did was get bigger and stronger. The government funded their buying other ones and merging. So if there's no responsibility, we're in trouble. We're creating a spoiled, entitled brat. A spoiled, entitled brat called Wall Street and the Federal Reserve. Hey, don't worry. Someone else will clean up your mess. Yeah, you get the return. We take the risk. Free has never been so expensive. So expensive. And look, if this isn't upsetting enough, I'm going to get to some better information here soon and give you solutions. But I think it's so important to understand this. This will all be continued to be reported in half-truths at best. You're going to hear about money being lost. But money wasn't exactly lost. It instead was transferred to the richest people on Wall Street. It's transferred, but it's reported as lost. Half-truth. It doesn't vanish or disappear. It appears in someone else's bank account that you've never seen, that you never met, that you don't know, because there's options trading like puts and calls. There's derivatives. There's selling short. There's all of these types of things that if you don't understand is happening to you at your expense. That's why we have a wealth gap that continues to widen. And the government thinks the solution is to tax the rich. Hardly. Not to tax the rich. Let's tax the fraudulent. The solution is to follow the money, follow the fraud, and demand accountability in a legal sense. If you want to tax the rich, tax the central bank. Tax the Wall Street executives that perpetuate losses and fees without consequence. Tax any public servant that works for the government that goes in poor and comes out rich. Tax them. See, the Three Stooges, they want you to think the entrepreneur is the enemy, the average business owner that's not publicly traded. But entrepreneurs, they don't have lobbyists. They aren't massive contributors to elected officials so they can be owed favors like FTX, that fraudulent exchange in crypto where the guy was donating money to the political parties. Yeah, to look the other way, to even if they don't look the other way, to not look deep enough because they're blinded by the power. They're blinded by the attention. They're blinded by what they're trying to get at the expense of the truth. That's when these lobbyists and these big corporations, they want to be owed favors. They're agnostic on which political party gets in. They just want whoever they can control or whoever they owes them something. The people that are doing the most damage are a few select publicly traded companies. The ones that you actually are funding inside of your mutual fund. Yeah. The ones you unintentionally vote for with your dollars. If you're familiar with selling short or derivatives or swaps, well, these are the strategies of betting and leveraging that destroys the wealth of hard-working people as it's extracted, as I've used that word before, from your home to some massive conference room and a backroom deal in some building in New York City, sucked out of the account into the pockets of Wall Street. They're in the know. They're offloading garbage at an unprecedented rate, and then the average mutual fund holder is the one that pays the price. The very few take from the many, the unknowing. Let's be clear. If you're facing inflation, it's because the game is rigged. If you're feeling taxed, it's because you are. The game destroys lives. It robs the energy and freedom of people. And it continues in chaos of confusion and complicity through this complexity. Yeah, look, there's a lot of C's. Continues in a chaos of confusion and complexity, but it requires our complicity. I talked about voting with our dollars, and here's where we've been complicit. Dollar cost averaging into retirement plans fueled by mutual funds. $27 trillion are in mutual funds, in stocks of companies that we probably would never want to succeed, that we don't want to be part of our world, that are doing all the backroom deals, that are involved in a lot of this garbage, but we just set it and forget it. That's what we're told. It's too complicated. We don't have time for this. Yeah, we're told to abdicate responsibility and hope for the best, but know that we're giving it to the worst. We're giving it to the worst people in the world, not the people that your financial advisor, retirement planners. They're middlemen. But we're buying stocks, all while there are dark pools where the Wall Street criminals can buy at different prices for themselves. Or use supercomputers to skim money through flash trading. Yeah, every time you go to buy, they just skim a little bit each time, charge you a little bit more. Or what about Wall Street selling off something they know is worthless before the public catches wind of it? You get it. That should be illegal. That should be fraud. But they are looking out for themselves. They guise it in commissions. They get it in salesmen's hands. But they're pretty smart. See, we know not to trust them intuitively. But we've been indoctrinated that investing means buying stocks, buying bonds. We think of investing as putting money with a local financial advisor, not Gordon Gekko. By the way, when that movie came out, it's about fraud, but they got to bang hot chicks and do cocaine and have great apartments in New York. So there was a 400% higher rate of applications for brokers. 400% after fraud. Is that what we'll sell our soul just to have the lifestyle, even if it's on the backs of the people who don't deserve that fraud? See, investing has become so synonymous with stocks, just like Kleenex is synonymous with tissue. It's branded in our brains as the same thing. It's burned into our thoughts. Yeah, I know it's a bit heavy. There's a lot. But I want you to be in the know, because then you can make different choices. Because we've been convinced investing is too complicated for us? That was intentional. All the words that they use. We don't have the time or know how to figure it out. Derivatives, options, calls, puts, collateralized debt obligations, mortgage-backed securities. There's so many words that you can use that sound super sophisticated, but they're just used for confusion. This has led to a place of abdicating responsibility and handing our money over to the wolves as we become prey to those without morality. Those that thrive on power and the hunger of taking all they can with no consideration for humanity or the cost. I know why we hand our money over to investments we barely understand. I know why we buy into stories from salespeople that are rarely true. And people who never have had our best interests at heart. I know why we do it. It's a story of we're too busy. It's too hard. I just trust this. What else am I going to do? It happens with the kind middleman, the unsuspecting, don't ask questions, and they study salesmanship more than technical analysis. The so-called financial advisors are carrying out the best they can. They're good people carrying out bad ideas. Their pay structure blinds them to the truth. Their livelihood is predicated upon peddling risk to the busy and the uneducated. Look, this is a bold statement, but you'd be better off the last few years for most people just blowing money than putting it into investments you know nothing about. The massive losses that I suffered in 2008 by being over leveraged in real estate because it wasn't more land that was going to be made. Have you never heard of volcanoes? And they're now making islands. There's real estate always goes up. Stock market goes up, it goes down, but it always goes up. Like all the things that we've heard to turn our brains off, to no longer think and hope for the best while we experience the worst. They spout ideas, these planners, like dollar cost averaging. Who wants to be average? We've seen the studies over and over which have proven that it's ineffective and inefficient to dollar cost average. It's ineffective and inefficient. Let's just say you put money in no matter what. Oh, the market's flat. The market's going up. The market's going down. Just put it in all the time. You buy it at an average rate. You hear them spew the ideas like, you're in it for the long haul. That sounds terrible. Yeah. Well, Wall Street wipes out a large portion of your return. Dark pools, flash trading. Or they reiterate that high risk equals high return. They forgot to say you take the risk and Wall Street gets the guaranteed return. You don't have to read to figure this out. Watch Margin Call. Watch Big Short. Those are fantastic films. Again, these are just part of the problem. Want to find out just how good they are? Well, start asking your advisor different questions. Have them talk to you about mortgage-backed securities or collateralized debt obligations or derivatives and their role in the 2008 collapse and what it was when there was like all these derivatives that you could be, selling so many CDOs, collateralized debt obligations per dollar. There was actually $200 of contracts out there. Ask them, what is a derivative and what's an option and what's a call and a put and how does that work? Ask them about the impact of dark pools or flash trading on your return and your portfolio. Have them show you an investment bank recommending to avoid or sell during an IPO. I've only seen buy. If you don't say, if it's not buy, it just sounds like in sync, right? Buy. But it's BUI, not BYE, although your money will probably go buy to a certain degree. Have them explain how stock buybacks, this is a huge one, from quantitative easing worked and whom it benefited most. Yeah, all this money was given to Wall Street to build infrastructure, to catalyze employment. And what'd they do? They bought back their stock because they got free to cheap money. See, when your advisor tells you 6 to 10% is a good return on your money, ask them, what are banks making through fractionalizing? Or what's the spread on the bank's money? Handing your money over every month requires you to be complicit with volatility, with loss, with risk, with non-performing fees, and all that. Just for some bad actors and ideas in Wall Street. Wall Street continues to use confusing terms where they intentionally perpetuate confusion, frustration, where they rely on salespeople posing as planners. If you've ever seen Boiler Room, one of the characters, Giovanni Ribisi, is like, hey, he's asking Vin Diesel, like, how do we make such a big rip? Why are we getting paid $2 per stock that we sell on a stock that we're selling for $6 to $8? Those percentages are actually. He goes, do you not like being rich? Why ask so many questions? That was the response. So what happens if you have a salesperson posing as a planner. And they do the work because it pays enough commission, and then they're so deep in that if they were to admit that they were wrong, then that's like a doctor that used to smoke admitting that smoking wasn't healthy. It took a long time for that to finally be unveiled. You know, we'll see more and more of that, whether it's mercury fillings in the mouth. I mean, mercury in the mouth? I mean, plastic surgery, when we see, breast augmentation, that's ruining women's lives with all the stuff that it's doing to their immune system. But we don't point that out because it's an industry and we don't want to lose jobs or take accountability. That's not capitalism. It's cronyism, where these big corporations and industries have the government do their bidding, like the government's a subsidiary for them. This is the theft. But this theft isn't plain and simple. It's complicated. Quantitative easing, fractionalized banking, stock buybacks, derivatives, underwriting IPOs at a bank. When we use complicated verbiage and there's high commission for the army of advisors to look the other way, that's the problem. It may seem dark and bleak, but there's a better way. There's solutions. I'm here to tell you it begins with responsibility and opting out of corruption as much as you can anyway. I have zero money in the market. No. See, if money is a man-made tool of exchange and designed to be more efficient so we could trade with one another, when we merely add more of it through quantitative easing without adding value, it effectively robs our purchasing power. That's inflation. If money represents value and we increase the money supply without increasing the value provided, it's watering down to the soup. That's inflation. And when we allow for policies and financial products to route gains to the few at the expense of the many, we lose. When quantitative easing added at least 40%, I think it's more, to our money supply, how did that happen? Poof, they just added it. And at what cost? Like, who did something for it? They just printed it. They just added it. It was put on computer screens. It massively impacts the value of our money. Simple supply and demand. So what's next? What will they invent as the next solution to the problem we face with inflation that they created? By the way, where did most of the money go again from quantitative easing? Wall Street. Yeah. Went to the disproportionately, quantitative easing went to banks and to Wall Street. They already have the biggest buildings. You know what they need? More cash. You're not going to see it on the main street of your town, especially I grew up in Price, Utah. That main street didn't see any of that money. It's not going to go to the poor. It's not going to go to the people who are disabled or mentally ill or that needed it the most. It's not going to go to the unique boutique businesses that were deemed non-essential during COVID. It's not going to go to most small businesses. Instead, it went to the publicly traded chain stores, deemed essential services that were making plenty of money. Some have made even more money during COVID. They didn't need the help. Is that fair? So with quantitative easing, the banks, did they really lower their interest rates to the same? No, a little, but not to the full degree the Federal Reserve lowered the rates. So it helped the banks, but now it's hurting them when the Federal Reserve raises interest rates. So look, this helped the banks more than the people making deposits. It helped their spread. Oh, and what Wall Street do with the money? I already said. Stock buyback, not infrastructure, not a lot of hiring, not really. They did, however, help themselves. They did, however, make sure to use this money to benefit them to the highest possible degree. What a surprise. And while the government did send some checks to most Americans, at least for a while during lockdowns, which for some of these people was desperately needed. Like, it breaks my heart when I think of all the kids at my son's school that don't have enough food. I mean, they're just born of a family that's barely making it. And I know there's narratives out there being like, oh, well, these people aren't doing, some of these people have 2 to 3 jobs. They're just doing shit work and getting paid terrible for it. And if they were sick or struggling, Some of the money getting to them, I get it, was free money. But you know what? A lot of this free money landed in the wrong hands. I mean, think of all the government incentives. This was given to businesses and people that didn't need it. Foolishly, the CARES Act added a lot of tax incentives to businesses through employee retention credits. Basically, you could be getting like $27,000 over 2 years of tax credits if you had any sniffle or sneeze or any minor issue with COVID. Not like if it really impacted you, like some of the caterer clients that we had, just anyone. And they gave PPP, this money that was going to businesses. It was money that went to them to help them, to businesses that were thriving off of COVID environment and didn't need the handout. A lot of SaaS companies were crushing it. A lot of virtual companies were killing it. Like Shake Shack. Tons of people were ordering from Shake Shack. They got PPP money, like $10 million, while they had skyrocketing profits. Really? How about Tom Brady and Kanye West got millions from PPP? I guess karma's a bitch, but you know what? I love his music, not going to lie. So thanks, Uncle Sam. Maybe this is the uncle we should stop inviting back for Thanksgiving dinner. Hey, we're tired of you molesting us, uncle. And with all this free money, the unintended consequence happened with the difficulty of hiring and keeping employees for some of the biggest employers in the world, small businesses, not the big businesses, small businesses. There's so many more of them. And they were having a hard time keeping people employed because of the free money that was going out. And sure, maybe these people got to spend some much needed time with their family. But the money wasn't free. The money contributed to inflation. The money contributed to the debt. I mean, hell, this notion of why work because the free money is a debt that someone will take care of. But then we're going to say, hey, let's just tax the rich. Tax the right rich. Tax the people that are rich through fraud and through all of the things I'm talking about here. The people that have more money than you could ever imagine and could never spend it because it becomes about power and it's a game on the backs of hardworking people. So I want to say that there's a lot of people that have really shitty jobs in this world. And a lot of those jobs take them completely away from their family. They don't get to have those memories. They don't get to have that experience. And many are simply exhausted, right? Those jobs are exhausting. Some of these people are just born into difficult circumstances and environments, or they have some crazy thing that happened. If you were to interview them and talk to the human being instead of just judge it on what they make, you would see, like, I get why we're like, we need to help. We helped a lot of the wrong people. Look, I get it to a small degree. I washed cars and mowed lawns for years. That was no fun. I get it. I'm white collar now. I write books. I do the things that I enjoy. I'm in a rare situation. But paying me PPP money or employee retention credits, like that doesn't make sense. Get that to the people who are barely making ends meet. Get it to the people who are underpaid and underappreciated. But I'm here to tell you, like, this answer isn't going to come from any government mandate. Let's just trust Big Brother to handle this. Well, Big Brother is controlled by big corporations and private bankers far too often. This is the Three Stooges. All right, so I've hammered this, but now what can you do about it? How do you solve this? You got to start trusting yourself. You've got to find where your value is. You've got to invest in yourself. You've got to find self-reliance. You got to do what you can to be able to add the most value, but also take care of yourself first. Like when we're sacrificing and giving everything to everyone else at our own expense, we lose energy and momentum. And like if we can be more stable on our own, we can contribute more later. We can contribute more to others. See, the government, the Fed, and Wall Street, they can't come and steal your mental and relationship capital, so build that. If you know how to invest in yourself that builds a way to create more value, if you can focus on connection with others and building a community and use value creation over victimhood or scarcity or getting stuck in the news cycle, that's the key. So the good news is, look no further than the mirror. The solution is within. It just has to be remembered. You can recapture time if you replace complaining with creation and connection. This video start out with calling out what is, and that can definitely be perceived as negative news because what happened is kind of a travesty. But all progress begins with honesty. life and the action we can take to improve it when we deal with reality. That's the thing. We got to deal with reality. With reality, we can make better choices rather than being held captive by the cloud of confusion. Wealth isn't built through complaining, and it isn't built through sleepwalking either. So I'm asking you to wake up to the truth of who you are, what you're capable of, the value you can add, and that we're putting our hands and our trust in the wrong people. So I guess we're still going to have to pay for the sins of the Federal Reserve, of Wall Street, and the government's past. It would even been even worse if technology didn't aid, but technology can't carry this whole thing. It's not the only solution. Look, for some, you may have had great intentions that led to mistakes by funneling money into retirement plans. Like, that's good. You're trying to take care of your future. But if you have high interest rate loans, or you haven't really figured out what you want to do in life, or you are confused about your value, why are you funneling it to everything else first? That money could be put to better use because you don't have to participate in Wall Street's scheme. When the dollar is a byproduct of value creation, of exchange, when it's of serving others and solving problems through human action, that's where wealth is built. Everything else is just smoke and mirrors, robbing us and devaluing human beings. Inflation is theft, truly is theft. It's silent but deadly, like one of those terrible farts, right? Like you smell it, you're like, this stinks. Yeah. So if money is potential energy, inflation reduces our stored energy, reduces our capacity to tap into other people's energy with that exchange, because it destroys our purchasing power. So now it's time for appreciation. Appreciation for who you are and what you're capable of. This is the key to growing wealth. It begins with the most precious forms of capital. This is like hidden potential. It's really about knowing your value, as I said. So the solution begins with mental capital. It's your ideas, it's your knowledge, it's your wisdom, it's your insights, it's your tools. If you don't tap into that, you're doomed to learn the same lesson. The lesson that happened from 2000 to 2002, 2008 to 2010, 2020, and again in 2022, and is still being put forth. So it's kind of like those old commercials. Remember those like famous actors? The more you know, boom, boom, boom. Yeah, like it's like that. The more you know. So develop your skills. Put your money into your abilities to earn more income rather than sacrificing your life for the next decade hoping to retire. Retirement is a dangerous concept that gets us to turn our lives over to someone else in the hope for a better future at the expense of today. Look, if your investments are outside of your mental capital, you don't have knowledge around them, it doesn't support you in gaining new knowledge to make better choices, that's not investing, it's gambling and speculation. Go to Vegas, they serve drinks. Don't be doing that with your money. Instead, ask yourself, how can you reach the most people and create value for them? How can you most deeply impact those that you serve and create more value? Begin with building a solid financial IQ so you can opt out of the trap and opt into a better life. Simply said, grow your mental capital and you can minimize your risk and maximize your return. There's one solution. The second one, it's relationship capital, the most useful yet underutilized capital in the world. It's stored in the goodwill and equity of people. It's networks, it's organizations, it's friends, it's mentors, it's our family. We'll have hidden and unutilized capital. Tap into it by knowing what you want, asking for the support, and then adding more and more value. Collaborate and connect. Invest in those relationships, in your relationships. Who are your advocates? Who are your referrers? Who are your biggest supporters and fans? Find the catalyst, the ones that will speak your praises, connect you to opportunities, and leave you uplifted. This is how we get out of this funk. Now, the third thing is quality of life. You are your greatest asset, not a bond, not a stock, not a piece of real estate. The more you invest in yourself, the more you build a life that you love. And when you take back control of your finances, the more energy we'll have for the things that matter the most. And this is going to increase your enjoyment of life. This will help you find your energy. Part of it might be where I'm at right now. I'm at my sanctuary, the place I love the most. So I could think without the noise of the world, without the narrative of social media or anything that distracts, right? What's distracting you at the expense of listening to yourself? Look, if the experts were so expert, the Federal Reserve, the officials in the government, the Wall Street, like, come on, They got the Ivy League education sometimes. We have lost our own way. Now, where are you going to find money? Well, you can recapture cash. Stay on my channel. Look around. We have so many videos on how to keep more of what you make without having to cut back, how to plug financial leaks and stop overpaying on tax or on interest or the non-performing fees that line Wall Street's pockets, or making sure you have the proper insurance design so you're not overpaying to insurance companies. This is about being efficient and savvy with your money, leading to boosting your bottom line. There's so many videos. Look at the 4 Eyes video. Check those out. The 5th one, maybe a little bit more controversial. I'm not an investment advisor anymore. I passed my RIA back in the day, registered investment advisor, had 663, all that kind of stuff. It's time to lock out the wolf. Remove, reclaim, and rejoice by taking all your funds back from Wall Street. Stop giving them your money. It's your money. Take a stand against the flash trading and stop encouraging them with their dark pools or giving them access to steal your money when they have derivatives and all these options. And instead, if you have high interest rate loans, pay those off. Investing in figuring out your investor DNA. You know, what are your values? What are your drivers? What are your biggest ways to contribute? For some, it might be real estate. For others, it might be a business. And for others, it might be creating intellectual property. You can build assets with your abilities. My assets are books, these videos on YouTube, the comedy show that I built, my one-man show. If you go to my website, GarrettGunderson.com, my catalyst relationships, my cabin I'm sitting in right now. It took me years to find what investments make sense for me. It wasn't the oil and gas that I invested in early on, or the commercial real estate that took so much of my attention, or the fourplexes, or the mutual funds, or the retirement plans, or the individual stocks, or the IPOs. I made so many mistakes to get here, but the biggest one was my early greed combined with the lack of accountability. Just handing my money over. No one will care more about your money than you do. So stop handing your money over to the institutions that do the opposite of what they tell you they're going to do, and they instead set you up for failure. Number 6, create economic independence. The game is cash flow. Focus on cash flow. Focus on cash flow. Find assets that produce cash flow. When your cash flow covers your expenses, you have more breathing room, you have more choice, and you have less stress. Look, you go to cashflowbanking.gg, set up a meeting. It's a place to store your wealth. It's not your long-term. It's not your only plan, but it's helping you protect from liability. It's tax advantage, and it's available before 59 and a half. It has a multitude of benefits, and so when there's a right opportunity, you can capitalize, and you can store it in a protected place. You have downside protection. You can reduce your risk. I don't want to use banks for anything more than minimal necessary funds for monthly transactions, because the way they fractionalize their banking, the risks that they face today. I have a little bit FDIC insured. I don't love that it's all FDIC insured because that's just our own tax dollars. But the bottom line is I have no more than that. The rest of it's in cash value insurance and cash flow banking because it's much more stable. We watched it in 2000 through 2002, 2008 through 2010. Find a company that's been around in the Great Depression and that they did just fine. If you want to know more about that, you can also go to GarrettGunderson.com/offer, no charge, and you can get a couple of my books. Especially read What Would the Billionaires Do, or it might be called What Would the Rockefellers Do? Same book. Now here's one that you might not expect. I know that crypto's been chaotic. I know that people have lost money in crypto, and it's going to continue to be chaotic and volatile. And so if you need the money, don't do this. But if you have extra cash that once you're economically independent, I move money every week into Bitcoin. It's deflationary. It's decentralized. I can move a lot of it in a little wallet, a hard wallet that I put in my pocket or on an exchange. I don't leave it sitting in Coinbase or anything. I just use that and move it immediately. It's going to be volatile. I have a lot of Ethereum as well. So there's a lot of utility built upon the blockchain with that. I like Bitcoin because with central banking, it's all closed door. It's not an open database. It's an open ledger with Bitcoin. They're not going to keep making more and more and more of it. It'll just keep, and they're not fractionalizing it. It's not controlled by the Federal Reserve and by the normal banking system. There's going to be plenty of negative news. It's definitely threatening, and it's coming out, and it's disruptive. So there's plenty more to say, but that's for another day. This is to plant a seed of possibility and consideration. I also like to mention, do your research. Figure out your investor DNA. I'm just telling you some of the things I'm doing here. You now have a good sampling of strategies, but again, if you like more, this channel right here on YouTube is dedicated. Go ahead and subscribe. Ask your questions. If you'd like to explore anything more in depth, well, go ahead and put in the comments what you're looking at. Be specific. I can film videos to answer if it's a long question. Now, if you're tired of being the host for the leeches to live off, and if you're done letting them extract your value and the extinction of your purchasing power, well, this is the pledge. It begins with responsibility. You do actually have time to face your finances. You just have to give up the things that no longer serve you. Stop watching the news for one, or take a break from social media or binging on Netflix for a little bit. Take that time to focus on self-care and growth instead. If you're ready to stand up for yourself and take back control of your finances and your life, I think this will be for you. I recommend writing it down. I recommend saying it a few times. And can I get an amen? I mean, this is a little bit preachy, but a little bit passionate. But if you're with me, if I can get an amen, here's the producer's pledge and the beginning of the financial responsibility movement. Number one, repeat this. I'm my greatest asset. Number two, I invest first, foremost, and always in myself. Number three, I will consider quality of life in my financial choices. Number four, I will consider peace of mind when investing and avoid investments that create fear and scarcity, right? This is the economic peace of mind must be in harmony with your finances. Number five, I do not fund others' dreams before knowing and investing in my own. Number six, I'll create a life, career, and purpose I don't want to retire from. Number seven, I'm going to find a team. Utilize that team, but never relegate or rely upon Wall Street or one individual for my financial health, my financial life, and my financial success. Number eight, I will not expect people to care more about my money than I do. Number nine, I will no longer diversify into investments outside of my knowledge or investor DNA before I'm economically independent. All right, it's time for you to have a plan. It's time for you to have the final say in that plan and follow the plan. Hey, thanks for watching. I appreciate it. And if you're enjoying these videos, well, there's good news. More where that came from, so go ahead and click through and watch the next video now.